The following is a presentation of TFNN. The Trader's Edge with your host, Steve Rhodes.
Good morning from TFNN. Welcome to the April 15th terrific Tuesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. Hope everybody had a great evening out there. Let's go take a look at one of our tools. This is the tool I call what appears to us as the impossible may simply be the untried. You know, if you really stop to think about it, nothing, and I mean nothing, is impossible. There are ways that lead to everything, and if you are, and if you and I would say, if you and I have the sufficient will, we will always find the means, because if there's a will, there is a way. In my opinion, to say things are impossible is merely a search for a justification to take no action, certainly no massive action. In fact, if you align yourself with a belief in limitations, then impossible is certainly the appropriate outcome. And the reality is that the word impossible, unfortunately, is used more today than the word possible is. So if we search the dictionary and we search on the word impossible, it turns up the following. It says, not possible, unable to be done or performed, incapable of being true, and utterly impractical. Now, of course, if you were to go to the Stevie dictionary, the only definition of impossible is merely the untried, because if you have the will, you will find a way. Each of us know this to be true. And today, today's going to be the test for the bulls to see if they have the will out there. So as you and I, as we begin our day, no matter what obstacles we may have to overcome, let's take the word impossible and instead say, I am possible. Because, folks, as we think, so shall we be. Let's go check out these markets out here. Right now, we've got Dow Futures trading up 28 points. They're trading out at 16,124. S&P up 3.5, trading at 1828. NASDAQ Futures up 9 points at 34.79. Russell 2000 up a little over 6 points, trading at 11.17 and change. Big move in the marketplace this morning is Goldilocks and silver, so we'll spend some time immediately right off the bat taking a look at those. You've got gold trading down $33 right now, trading out at $12.94 off of the session low. Silver is down 56 cents. It's trading at $19.45. Light sweet crude back 72 pennies right now, trading out at $103.33. A quick look across the globe out here. We've got a DAX in Germany off 40 points, about 0.4%. Flat market in the UK. The FTSE is down 4 points. A mixed bag in Asia. Last night, Nikkei up 86 points, 0.6%. Hang Seng off 1 0.6%, down 367. Shanghai off 31 points, about 1.5%. So Goldilocks. Let's start by taking a look at Goldilocks. If you're watching us on TigerTV, you can see one of my charts here for gold. Trade out $12.94, and if you're listening on the radio, your mobile device at tfnn.mobi, thanks so much for doing that. Remember, you can always catch the archive of this show by going to Channel 9, or the live version of it by going to the homepage of tfnn.com, and shortly after you sign up for Tiger Dollars, which is one of the things that you should do out there, over on the right-hand side, you'll see a button. Click on it. It's got three little smartphone-type devices, and this show will stream live to your handheld or mobile device out there. As we take a look at gold, here's what we can take a look at. A number of different factors. Number one, coming off of the low back here in the December 31st time frame, gold hit a low of 1181.40. Now, what it did was it formed a real nice rising price channel. Those are the black diagonal lines going across my screen out here. In fact, what gold did, gold had broken a very long-term descending price channel. This is the one going all the way back to the highs that we saw inside gold. So it broke a trend line. It broke a channel line. That set up a new move to the upside out here. Now, what gold did recently, first it made a top out here, gave you a signal. Certainly gave a bearish signal, gave a bearish engulfing and a key reversal session as gold was in the overbought level. And that was on the trading session of March the 17th. Now, the beauty is that gold was pulling back, and what it really should have done is moved all the way back down to the bottom of that rising price channel. And it did that on the trading session of March 25th. It was kind of pulling back with a little bit too much volume, broke through that channel. The following trading session, when you break a channel, rising or falling, doesn't matter. What typically is going to occur is prices are going to try to get back in to it. And that's exactly what took place yesterday. Now, you look at the daily chart and you say, hey, it didn't make it exactly to the top of that channel. Yesterday, the high was 1331.40. If you switch to some different time frames, because when we're using these channels, we're using co-located opens or closes. Doesn't matter whether it's an open or close. We're using the body of the candle because it's truly the essence of price out there. And if I switch over, in fact, I'll just kind of flip back and forth here. Here's the 120-minute chart we'll put on the screen here. In the 120-minute chart, here's the rising price channel. You'll see it hit it right to the T. I mean, right to the T. Yesterday did it twice out there and rejected price. Now, what I'm going to do is I'm going to switch back here, and we'll take a look at the daily chart, because the daily here is important for us to notate. So what we also know about gold is that gold stopped at the 200-day exponential moving average. That's the red little squiggly line going across my screen. Right now, the 200-day exponential moving average, 1327.92. Now, what we're potentially taking a look at here is a potential A to B equals CD down. If we take a look at the swing point, which gold has already hit this morning, the swing point is going to be April 1st. That has 133,000 contracts out there. We have already traded today, not we, but gold has already traded today 113,000 contracts. So it should be able to take on that swing point. Now, it hasn't tested the swing point low. It's only been able to first price into the swing point high, but it's moving into a swing point with volume. Never a good scene when that occurs out here. And in fact, if yesterday was the C point of an A to B equals CD to the downside, this is absolutely not the way you want it. Well, if you were short gold, this would be absolutely the way that you would want to see a move coming off of a C point. You want to see an explosive move. Now, here's the deal. Day's not over yet. So we're only taking a look at this trading session here as of 9:15 this morning, so we can't completely make the call. What we do know here is that gold only made a dead cat bounce, a 0.382 retracement, and ran into a price channel that was trying to get back in and couldn't do that. So the look of this right now says that on a daily basis here, what gold's trying to do is get down to 1216, maybe even 1184, or 1 to 1.272, A to B equals CD to the downside, and come all the way back and test that swing point from December 31st out here. That is what's going on with Goldilocks. If we take a look at we utilize this tool. If we go take a look at let's take a look at the 120-minute chart using the Rhodes Momentum Indicator system out here. Let's go see what we've got. And one of the, excuse me, sorry about that, little dust ball seemed to have gotten into my throat. Still there. There we go. Nothing that a little green juice or water can't get rid of. Now, 120-minute chart that we're looking at. So yesterday, as it was hitting the top of that rising price channel, what it was also doing, it was making a price relative strength divergent pattern out here. So it was making that pattern as it made the high at about 4 o'clock. It looks like about 4 o'clock in the morning here. When was that? April 13th, a couple trading sessions ago, actually, when it actually hit that. So we had a nice price relative strength divergent pattern. We have seen here that what price has done right now, it's actually come back on the 120-minute chart, and it's testing a little hammer low. So the last time that gold made a bottom out here happened to be about, about 10 o'clock in the evening. That was on March the 31st out here. And when it did that, it was also making a price relative strength divergent low. That means price was traveling lower, and it was doing it with less weakness out there, less relative weakness. And then it gave you that little hammer signal here on the 120-minute chart. So if you were a trader, you would be taking a look at that. If you were short at that stage, you would be saying, this is really something to think about, especially since the very following candle was what do we call our second opinion, was a bullish engulfing. It was telling us that gold here was trying to hammer out the lows. Now, why is that important? Because gold so far this morning has come back and has tested that hammer candle. Neither this is going to act as a support area, one possibility. Now it's tested the top of that hammer candle. Price, by the way, out there is $1284.90. If you see price close below the low, 1277.40, that would be a very bearish thing. Why? Because if you're in the case of rhymes out here, and I've got to pull up my email now. In the case, because I've got a really great rhyme here for the shooting star yesterday. So I do thank each of you listeners out there when you do send me emails, and especially when you come up with great ideas and answer questions. So on the hammer candle, if you break below the hammer, if you close below the hammer, if you're long, you're wrong. That's the expression that's out there. Yesterday we were talking about shooting stars, and one of our listeners said, if you're short, abort. I love it out there. I love it. That's one that we have to use out here. I just have to go ahead and get it into memories. Now, what we can also take a look at here on the 120-minute chart is, as we've seen a push down this morning, we've seen a push down into what? Into an extreme oversold territory. So what we've seen here is a bounce off the low. So far, the low out here this morning is at a price level of $12.84.40. You're $10 higher right now, $12.94.40, with gold being in an oversold territory. It needs to work off that oversold condition. At this stage, to me, that is all that it looks like it is doing out here. The real key level, though, is going to be this hammer low on this 120-minute chart. That's going to be at the price level of $1277.40. If, in fact, it breaks through there, we're likely to see, because $1277.40 also happens to be the low of that swing point, which we know price is traveling in there with volume. So you break that, you got the hammer candle saying if you're long, you're wrong. You've got probably a confirmed A to B equals CD to the downside if it can bust through that level. 877-927-6648. We'll be right back, folks.
Yeah, it's always better when we're together.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire. So now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back. Now let's go out and check on silver out here, where we've got the largest movement in the market. So silver now this morning trading down 58 cents, trading out at 19.43. Now silver perhaps giving us the biggest signal with regard to what the metals markets here want to do. The swing point, now if you're watching this on Tiger TV, you can see the 0.786 Gartley buy pattern that formed here on the trading session of March 27th. The silver got down to $19.57 out there. We actually had a confirmation on that very next session out there, albeit small. These were really small-bodied candles out here, so not a ton of conviction behind the move. Nonetheless, you did get a bullish reversal signal. What we saw here was we saw both gold and silver only make a 0.382 retracement. Now I'm just looking at the C to D leg. When you take a look at a Gartley sell pattern, quite frankly, your real retracement ought to be from the A point, from your A to your D point. In this case here, your February 24th high out there, that swing of 22.18 down to the low that was put in here on March 27th. It never made that move, which was $20.57. So I just gave it the easier one, which was the C to D leg, $20.42, which it did hit out there. And looks like it formed one of those shooting star candles as well on the daily chart out there. Set it up resistance at that 2042-ish range. Hard to really say if that's truly a shooting star. And the reason is because we really didn't have much of a change in trend out here. This was more of a sideways move, and so that really makes that candle, I would sort of not really use it for the message behind it, because you can see how silver here just really traded sideways. Well, look, what it's doing here this morning, nonetheless, it's a 0.786 retracement. And when a potential point, I'm going to give this a 0.786 Gartley buy pattern, because it really made that first-ish move out there by getting to 0.382 level. Well, here's the deal. When these patterns fail, it hasn't failed here just yet today, $19.57 is going to be very important to watch. What we do know is that swing point is being taken on with volume, and a 0.786 Gartley pattern, when it fails, typically turns into a butterfly pattern out here. So that could spell double trouble here for silver. What it is doing here this morning is the swing point low, 1957. That's 37,000 contracts. Silver already this morning has done 42,000 contracts out here. So it, at a minimum, sets up a test of the low, the 100% move, the December 31st level out there at $18.72. But what we can also see that is forming here, if in fact silver closes today below 1957, it's already got the volume, then you'd have a confirmed A to B equals CD to the downside. Now in silver, the nasty thing is that would actually set up a move to about $18.17, more likely $17.57 out there. And if we take a look at this, let's look at the expansion here from the December 31st low to the high that was put in here on February 24th out here. What we'll see, as you know, I say these 0.786 Gartley patterns can turn into a butterfly. Well, the potential that we have here for a confirmed A to B equals CD down also shows us between the 1 and the 1.272 A to B equals CD down. That means the C to D leg would be equal to the AB leg, or an expansion of 1.272, a Fibonacci number. That turns into the butterfly out here. So we want to really be paying attention. What's really going to be key today is $19.57. A close below that, and you then have a confirmed A to B equals CD down. That happens to match up with a 0.786 Gartley pattern, failed pattern, turning into a butterfly, and we ought to expect silver to get down into that $17.57, $17.77, maybe $18.17 range out there. That is what's going on inside of the metals market. Let's go take a look at light sweet crude here right now. It's trading off 45 pennies, no reversal signal. It does look to me like light sweet crude wants to go ahead and make its own butterfly pattern out here, and it wants to get up to about $106.51. Now, what we have seen out here is we have seen some ambivalence with regard to continuing its move up. It has really got, today is the fourth one, right? You've got four narrow-bodied candles. You got a doji out here from the trading session of April 11th. We saw a little bit higher close the very next day, but so-so because of a small-bodied candle out here. So light sweet crude is truly running out of energy, and I don't know if it's going to have enough to pole vault up to 106.51, but 106.51 looks like that is what it is trying to do. Certainly has not given us any bearish reversal signals, but it is telling us that it is running out of energy out there. That's what's going on inside of light sweet crude. If we take a look at bonds here, take a look at the continuous contract for the 30-year, it's running into its own resistance level. That's in that 135 area. That is that long-term consolidation pattern. Every time up in this range here, it gets turned back. No bearish reversal signal or anything, but it is up against its own resistance level. Right now, Dow futures up 23, S&P up 3.25, NASDAQ up 9. We get back from this break here. Let's go see how these markets are going to pop, whether they're going to drop. Right now, leading the charge the upside, Zebra Technologies, the nugget, leading things to the downside. We'll be right back, folks.
Well, it's always better when we're together. Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's diagnostic box spread analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
And we're up to the races. We got the Dow up 26 points, trading out at 16,199. S&P up 3.5, trading out at 1834. Composite up 6, trading at 4,029. Russell 2000 up a couple points, trading at 1117. Lead the charge to the upside here. You've got Visa up $1.77. You've got that's up 0.8%. Entergy Corp, E-N-T-E-R-G-Y, ETR is its ticker symbol. It is trading up $1.39. Google now jumping in the fray to the upside. You've got Zebra Technologies up $1.70. That's up a couple percent. Johnson & Johnson out with numbers, I believe, before the bell, up $1.11. Coca-Cola up $1 out here. Gilead Sciences, GILD up 80 cents. To the downside, we've got Transcenterix Inc. What the heck is this? It's an IPO. Okay, so we'll skip over that one altogether. So you've got all the long gold double and triples leading the charge to the downside here. Let's see. Apple is off 260 this morning. Northern NTRS is a ticker symbol. That's down $1.73. Amazon off 59 cents. Tesla off $1.74. Aaron's Inc., AAN, off $1.48 out there. So where do we begin? Let's take a look at what happened yesterday. We were talking about hammer candles, or I was speaking about the hammer candle on the 120-minute chart for gold out there, and that's an important low. Take a look at yesterday. So yesterday we had the market take off in the morning, didn't do a whole lot after, up until about 1 o'clock, and then we started to see a sell-off at about 1:30. This is a 30-minute chart here. This is of the Dow futures that we're taking a look at. Moved down into the 2:30 time frame and formed a hammer candle out there, and then a big swoosh to the upside, a big Nike swoosh to the upside out here. So that hammer candle out here, that hammer candle low, is an important area now of support inside of the Dow futures. We'll switch over to the other futures contract. You're probably wondering what that price level is. 15,977. So you can see the bulls here truly trying to finally go ahead and show their muscles here. We've got a nice little counter trend rally that is still in place out here. That was on the Dow futures. Let's take a look at they all did really the same thing. I don't know if they all formed a hammer candle or not. Let's put up the ES Mini. Again, this is a 30-minute chart that we're going to take a look at here. So we'll give you a nice little support area. Did we get a hammer candle yesterday? Oh, I got to put up the right contract. Can't put up the March contract and give you data. It'd be helpful if I did put up the June contract. There we go. So there's the June contract. Yeah, it did the same thing. Formed a nice little hammer candle. That says that you're low from that trading session at 2:30, which is at 1808.75. That becomes your significant support level out here inside of the ES Mini. If we take a look at the NQ, again, this is a 30-minute chart here. We'll switch over to that. Make sure I grab the right contract. There we go. That'll make it easier. So we saw prices pushed down. You saw a hammer candle form. It was really across the board. You've got it in the NQ as well. And then a nice big bullish engulfing candle, big wide price spread out here. We do see right now that price coming into the time period here of 8:30 this morning was making a higher high with less relative strength out there. It was very similar, very similar. In any event, once that high gets taken out, and I suspect that's what we're going to see out here, that high is at 34.85.75. We'll continue to see this counter trend rally in the markets continue out here. Let's go take a look at where that might take us to. Let me switch over. Let's take a look. Give me a moment here. Let's switch over. Let's go to the daily charts now inside of the futures contracts. So we just kind of keep things in sync here. So inside the, yesterday as we were taking a look at the daily contracts, what I had suggested was the key number to be paying attention to, and it's really the same here today. But yesterday you had what was called a piercing candle out there. So of the 5 real 2-candle reversal sessions out here, a piercing candle would be, if 5 was the strongest, this would be number 2 out here. Still one to be paying attention to. Piercing candle, same thing as a dark cloud cover on the bearish side out there. And you know, dark cloud cover, as we talk about, it's nothing more than the weather forecaster sticking his head out the door and giving a forecast. Or at least that's really the way I believe that they do it here in Florida. You know, they talk about super Doppler and all that stuff, but the reality is, you know, atmosphere can change at any point in time. Well, the key level to be paying attention to inside the ES Mini is going to be the high here from Friday. And that high is 1832. You're at 1830.75 right now. Now, what I suspect is the following things. Well, we'll take a look at a couple different things out here inside the ES Mini. You want to pay attention to the 1845-ish area, really 1840, because if, in fact, the ES Mini can trade back into that range there, that would be rather bullish. Now, we did have a full moon that came in yesterday, and full moons typically have a bias to the upside out here. They just all that great positive energy. I don't know if you got a chance to get out into your neck of the woods last night and take a look at the full moon. I believe they also referred to it as a blood moon out there, and I think that came in a little bit early in the morning, 2 or 3 o'clock in the morning. I was not up to experience that. In any event, it does have, we've got here is a little bit of resistance right around the 1845-ish area. If we take a look at normal retracement. Now, here's what the ES Mini did. What's interesting here about the ES Mini, about the Dow, is the following. If you were to read H.M. Gartley's book, and I suggest that you do it, you can find it online these days out here, and you went to page 222, what H.M., did some many years ago, he talked about, he tried to find the ideal places to buy or sell in a market that you maybe had missed out on. Now, in his case, here, if you were taking a look at the ES Mini and you saw this rally off of the lows back here in February all the way up to the highs here that took place on April the 4th, and you were saying, hey, you know what? I still am a bull out there. That was a nice big move. I'd like to be able to find a way to buy into it. Well, if you were utilizing his system, what you would do is you would buy the first A to B equals CD to the downside. That's what took place here on the trading session on either, well, it was really Sunday evening because we're looking at the futures contract, as it fulfilled that 1-to-1 A to B equals CD by getting down to 1805. Well, 1805.82, which, is the number. That's not where the ES Mini is going to trade to. 1805.75, in essence, would have been that number. Actually got down to 1803.25, and that was on Sunday evening before it started to reverse. Now, a couple of different things. Patterns work, the A to B equals CD pattern. So in essence, you have a Gartley buy pattern that took place yesterday, that completed yesterday. You had a piercing candle. You're getting some follow through here this morning. And that's what you like to see with regard to that pattern. Now, what are the areas to be paying attention to? Look, the dead cat bounce on this A to B equals CD. Remember, a Gartley buy pattern, that in essence is what we have out here right now inside the ES Mini. 5 potential outcomes. Outcome number 1 looks like that's what we're going to see here during during the radio hour this morning before the 11 o'clock show is over. That's 1837.34. That's a dead cat bounce. So that should be pretty much a given. And we'll find some resistance up there, I would suspect. The next area, right, your second outcome becomes 1858. And I say that is likely the target area of this bounce. And so long as this is on a light volume bounce out there, if it can do that, the reality is what it ought to do, it ought to come back to the breakdown area, right? If we took a look at stocks and you were just going to go ahead and buy stocks coming back to a breakout area, all we're doing here is reversing that. Well, the breakdown area inside of the ES Mini, that took place at the high on April 10th. And that would be 1867.50. So it is likely that the course of this bounce will take price up into the 1858 to 1867.50 range, and we'll know that. We'll get the signal if we see a nice wide-ranging bar today. If, in fact, all that happens is the ES gets up to about 1837.50 or so and then just trades sideways out there, there won't be a whole lot of conviction inside of the move. So that's what we're looking at here. That's the ES Mini. You'd see the same pattern here inside. Now, of course, what we want to do is we want to switch over and take a look at, hey, what's going on inside the week area out here? Well, in the week area, being the NASDAQ, that too formed a piercing candle here yesterday. Of course, we said if it could close above, which it did not do, 34.85, that would be bullish. You're trading it right now at 34.90 out here. So you've got and this had formed 2A to B equals CD down patterns. This had moved into the support level that took us back inside the NQ. That's what we're talking about here. Back in the support level of Ben Bernanke Day from December 18th. So it made a 100% move of a move. Only makes sense to see a bounce here. Now, the dead cat bounce of this, the larger A to B equals CD, this is where you've got real potential. 35.45 is your dead cat bounce. I suspect that that's what we will see at a minimum as far as the NASDAQ bounce out here. Now, you've got a couple of different things that you can also do. We can take a look at trend lines, so let's do that here. Let's get rid of some of these A to B equals CD patterns. Let's clean this chart up just a tad. We can always draw these back in here. We'll leave the retracement levels. And we can either look at trend lines. We could take a look at channel lines. Let's put them both out here. That's probably your trend line. So you'd have to say the bounce could take us up into there. Well, what does that say? That says, hey, bounce could make about a 0.618 retracement into about the 36.20 range out here, and we'll get a good feel from a volume standpoint, from a bar standpoint. Of course, whether we have wide-ranging bars or not, of course, what we can take a look at here inside of the NASDAQ is its real resistance level is going to be that high from April the 10th out there at about 35.99.50. If we go ahead, we can move this trend line. I can just do this just like that. There becomes the channel line. So there is your channel line just by taking a look at co-located opens or closes. And this would say to me that we ought to see the NASDAQ really give us a signal with regard to this counter trend rally that we're experiencing here. We'll really get a feel for it as price moves up into that descending price channel line out there. And here, all that I'm using the open session from March the 6th. That opened, by the way, 37.31.50. That's basically hitting the touch point here of the open from March the 21st. That was out at 36.90 and a quarter. It got the close of April 2nd, the open of April 3rd. So a nice little channel line that has formed out there, and we'll see what happens as price gets up into that area. And so we've taken a look at the Mini. We've taken a look at the. Let's go take a look at the. Let's go take a look at the Dow out here. Let's go see what the strong index is doing. Give you some price points there. Now, nice strong, also piercing candle yesterday. This also, just like the ES Mini, and I think it almost completed the A to B equals CD to the downside here. That A point being the April 4th high, the B point being the low from April the 8th, and the C point, yeah, completed a 1-to-1. Let me just get rid of this. Let me do this. That's not what I wanted to do. Let me try to do this. Get out over here so you can see the 1-to-1. There's your 1-to-1 A to B equals CD. Now, from strength, right, we got to see what is this doing. So if we go from swing point low to swing point high to swing point low is really what I should say. You can see we have it has smashed through now the 0.382 retracement number at 16,146. So 16,309 more likely, and that 16,309 is going to give us that's the area. All right, from strength we should learn a lot. At 16,309, really the number is 16,312. That happens to be the low of that April 4th swing point. That's where we get a good feel as to what's going on. And all you really need to do is, you may not follow the futures contracts out here. Cool, no problem. Just go over and take a look at the Dow Diamonds. Let's do that right now. And why do we want to look at that? Because we got a high volume bar out here. That was that bar on April 4th. That was Jobs Friday out there. Even though we had volume to the downside, it made a new high. And as I say, months from now, if you were to just get rid of, if you got rid of all of your biases, you can really do that on the very next trading session. You just have to get rid of your biases and go back and say, hey, what are these charts telling me? Yes, we came off of that with a vengeance, but the reality is, as I say, months from now, you go back and you take a look at it and say, hey, you made a high with volume out there. It says it ought to be tested. And that's what I suspect we are going to see take place out here. So inside the Dow Diamonds, that low, and that was already tested once, so it looks like price wants to get back there and test it again. That number's 163.58, 10 million shares. So 10 million shares is one of the benchmarks with regard to volume. 9.9 million shares was the April 10th downdraft out here, and the top of that is 164.31. So I think the range for the Dow is going to be 164.31 to the low of 163.58. At least that's what the message is as we speak right now at 9:48 a.m. And all we can really do is be willing to change our view of what the patterns are telling us as they take place out here. And that is just simply, all I'm doing is telling you the story of the markets as we speak right now at 9:48 on April the 15th. Hey, make sure you file an extension out there if you have not filed your return, and make sure if you owe some money that you go ahead and you include that with your extension out there. It is tax deadline date. And, of course, I want to say happy birthday to my son Connor out here. So it's a good day. Good day for me out there. In any event, let's go check out some of these stocks here that are popping and dropping. Let's see, what do we have to the upside? Let's go take a look at Visa, right? Number one weighting inside of the Dow out here. Dow's up 89 points right now. As we take a look at Visa, it bounced yesterday. Let's see what kind of volume we had in here. That was after Visa moving right down into this high volume bar out here, and that was from the trading session of July 31st, 2013, and the high of which was 194.90 out there. Price didn't get all the way down here on Friday, got down to 194.84. Pretty close, right? 194.84 versus, no, it did get down there. What am I talking about? It did get down there. It tested that, and it tested on lighter volume. Yesterday, Visa bouncing with pretty decent volume, 5.2 million shares. Of course, the downdraft it's going, pretty decent volume. The downdraft was going into was 5.1 million shares. Dow up 95, S&P up 13. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these three conditions. 1, choose only one pearl. 2, remove one pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. Dow's up about 99 points right now. S&P up 12. Composite up 28. Russell 2000. They're all up about 6, almost 0.7% out here. Quick peek in. Let me see here on the New York Stock Exchange. What do we have going on out here? Net advancing issues about 1,400 right now. So you've got about a 3.5 to 1 ratio. Let me open up my newsletter and see what the number is out here. I should have had that number written down on a pad of paper. Net advancing issues today, if they exceed 1762, so 1763 or north of that, that would be bullish for the New York Stock Exchange. The bulls would take control. So they're at 1405 right now. That's a number that would need to be hit. Let's check in and see what the how the VIX index is reacting this morning. Here, we'll take a look at some of our liquidity gauges. So the VIX index, the key number here for the VIX is going to be that 50-day exponential moving average. That is at 1483. You're at 1560 right now. It gets below 1483, and this counter trend rally will continue to motor on out here. If we go take a look at one of our other liquidity gauges, that's the Euro-Japanese yen. Let's go see what it is doing here. Euro-Japanese yen just simply continuing to tinker with the very important support level here, this nice wide-ranging bar, this breakout session from March the 6th. It cannot, or it has not been able to break through that level out here. So that fulfilled promise here of that divergence. Let me switch back. We'll find that chart out here. Give me a moment to find that. And the divergence I'm referring to here is when you have the euro-yen moving in the opposite direction of the ES Mini, and that's what we're looking at here. There's really only one time period I've been able to identify here recently where it didn't have any meaning, but let's not really pay attention to that because the majority of the time it does have meaning. That's really what we're seeing here right now with regard to this little counter trend rally. If you take a look at that euro-yen, that's the bottom portion of my screen now that we're taking a look at, and really what we were looking at as we looked at the actual currency pair, we saw that it was consolidating, was trying to bust out a low. So was this, my line here is horizontal versus the market here versus the ES Mini up at the top, which was moving lower. And the reason is that when the euro-yen does not confirm the move, the directional move inside the currency or the actual futures market or the S&P 500, it leads to a bounce. So that's what we're seeing here right now. When that bounces over this divergence here that I've painted, will go away, and then we'll have to start paying attention for any new signs that might take place out there. So that's what's going on as we speak right now. As far as things moving to the upside, to the downside here, let's switch back. Let's take a look at something that is moving maybe to the, we know that Goldilocks and silver, they're moving to the downside. Let's take a look at any equities, see what is moving out here to the downside this morning. You've got Comverse, CNCI. Make sure, yes. Now, that is trading off 16% here. Let's go see what is behind this move out here. CNSI. I don't know if that's what I said the first time, but that is certainly what I meant. Oof, wide-ranging bar in volume to the downside out here. This looks pretty ugly. Where is this thing headed to? This thing is headed to where nobody in this position will have any profits. Looks like this may have been an IPO back in October of 2012. This made a high here recently, back on January 21st out at 40.33. Looks like this thing is headed all the way down to lows around the $26 range out here. Big, huge A to B, big, huge confirmed A to B equals CD to the downside here this morning, as it has taken out swing points with volume out there. That is on Comverse Inc. Folks, it is Terrific Tuesday. If you're off to start your day, do have a terrific day out there. And please say, I am possible. You can accomplish anything you want in life. Thanks so much for joining me, folks. Look forward to seeing you soon. Bye-bye now.
Well, it's always better when we're together. Yeah, it's always better when we're together.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.